For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. So today we are very excited for doing this webinar titled Invest Using the Warren Buffett Way. How is everyone doing? My name is Stella and I will be the moderator for this webinar today. As we know, most of the ETF in the US market have outperformed the mutual fund in the recent years. If you are the investor who does not have time to monitor your portfolio, ETF could be your ideal investment. So today, we are going to look into how to build your passive investment portfolio by using ETF and other things that you must know before invest into the ETF. And also, disclaimer as usual, whatever we share on this webinar is only for educational purpose. So in no way that we are giving any recommendation for you to buy or sell any securities that we are mentioned here. So if you decide to make any investment decision, you are 100% responsible for all your investment risks. Now, allow me to introduce our speaker, and he is none other than Vincent. Vincent was graduated with bachelor degree in finance and investment. He is also an associate member of Certified Financial Planner who specializes on personal financial and risk management planning. Currently, he is helping more than 350 clients on managing their wealth, with more than 10 million ringgit AUA in wealth management field. His favorite investment quote is price is what you pay, value is what you get. Now, let me hand over the session to Mr. Vincent.
Hi, good evening, Stella. Good evening, everyone. Stella, can you hear me?
Yes, I can hear you.
Okay, hold on. Okay, good evening, everyone. Before I start, let me share my screen first. Okay. Can you see my screen?
Yeah.
For my audio and the screen, all okay, right?
Yeah, all perfect.
Okay, sure. Okay, so good evening, everyone. First of all, I'd like to thank Bursa Malaysia for the invitation. It's my pleasure to be here with you all tonight and share about tonight's topic, invest using the Warren Buffett way. Okay, so as we know, Warren Buffett has been recognized as one of the most successful investor globally. Okay, as of today, he is still the 5th richest person globally, and his net worth currently standing is about 140 billion USD. And all he do is manage his investment portfolio well. Therefore, learning how Warren Buffett invests definitely will be a key lesson for all the investor like us. Okay, so my name is Vincent. Just to do a self-introduction, and then thank you, Stella, just now for the introduction. So maybe I share some of my points that, why do I put this Warren Buffett quote? Okay, price is
hi,
what
Vincent.
Yeah.
You can speak louder.
Okay, yeah. Is it better right now?
Yeah.
Okay, sure. Okay, so maybe I just share why I put this price is what you pay and then value is what you get. Why I share this as my favorite investment quote, because one of the reason is that in investment world, most of the people keep looking at the price they are paying, okay, instead of focusing on the value when what they get. When they see the price drop, okay, the market drop, they're afraid of market collapse. Okay, when the price increase, they have FOMO. FOMO means fear of missing out. So basically, most of the investor have when they make their investment decision, most of them make via emotion. So I always remind myself through this quote, you don't look at what is the current value of your investment. You look at what you are getting with current paying price. Okay, so as long as the business itself, as long as the company is doing well, and then you have their own value, it will reflect one day. So back to today's topic. Okay, of course, some might say, Winston, how can I know the value of the investment? Because I know it's important, okay, but I don't know how to evaluate the initial value. Does anyone have the same thoughts? Which maybe we know is the value of investment is important, but we don't know how to evaluate the actual value. Anyone have the same thoughts on this? Okay, so basically, we actually have a way to solve this issue, which is let the market to do the evaluation for you, because this is what we are going to discuss about today. And Warren Buffett once said, by periodically investing in an index fund, the know-nothing investor can actually outperform most investment professionals. Okay, so what Warren Buffett is trying to tell us is that instead of choosing so many types of investment tools, okay, we have a lot of investment tools outside. So you can actually just simply choose index funds. Okay, so and you can beat a lot of investment for professionals. Okay, and then what is an index fund? How can this so-called index fund can outperform most of the investment professional? An index fund is actually called exchange traded fund, or most of us call ETF. Okay, so but for today, what we'll be discussing about these four major topics, which is what is ETF? First of all, what is ETF? And then secondly, how to build your passive investment portfolio using ETF. Okay, and then things you should know before investing in ETF, and the myths and the misconception of investing ETF in Malaysia. Okay, so let's start our session today. Okay, so first of all, what is ETF? Okay, ETF is exchange traded fund. It is actually a pool investment securities. In short, basically your money is invested to a basket of securities, okay, which you can actually trade it in an exchange, just like how you trade stocks. So to make it more straightforward, ETF looks like a combination of stocks and also unit trust fund. Okay, looks like a unit trust fund because you are investing in a market. Okay, and then consists of a lot of stocks, and then but you trade like normal stocks do. Okay, so this is what ETF. Okay, I'll give you an example. This is S&P 500 index, which represent the largest 500 companies in terms of market cap. Okay, so if let's say you are buying S&P 500 ETF, okay, which means you are buying all these top largest 500 companies in the world. Okay, which company do we have here? Okay, including Apple, Microsoft, Amazon, Alphabet, which is the mother company of Google, and Tesla, etc., etc. So if you, let's say you are buying this S&P 500 ETF, you are buying all these top 500 companies. Okay, so maybe some of you, if let's say some of the audience here are not familiar with US market, so I use Malaysia market as an example. So this is KLCI index, which represent the top 30 largest companies in Malaysia. Okay, who do we have here, including Maybank? Okay, I definitely, I think all of the audience here know these few companies: Maybank, Public Bank, Petronas, Tenaga Nasional, Nestle, Genting, etc., etc. So if you are buying KLCI ETF, your investment return will run according to this index. Okay, so if let's say this index goes up here, okay, you'll make profit, and then vice versa. So if let's say, for example, you are buying from here, KLCI index ETF here, and then the market drops, so definitely you are making losses. Okay, so as we know, ETF performance and index performance are just like best friend. Okay, they are like best friend. They move towards the same direction. So when index performance is good, so does your investment in ETF. Okay, so now you know what is an ETF, but then I would like to have a few questions. I mean, a question here to the audience here. Does it sounds like a unit trust fund to you? Okay, because both also pool investment securities, and then both performance will based on a benchmark. So if let's say it's like a combination of a lot of stocks in your investment. So does it sounds like unit trust funds to you? Okay. Yeah, I saw Arif say yes, Nor say yes also. So what is the difference between ETFs and unit trust fund? Okay, it's actually very simple. We look at four things. First of all, the investment objective. Okay, so for ETF, it's actually passively managed. Okay, basically it's designed to follow a performance of an index. For example, just now, it can be S&P 500 index, it can be KLCI index. If let's say you are buying gold ETF, it will based on the performance for gold. Okay, gold price. Okay, so basically there will be no active selection of underlying securities, and then the ETF fund manager will need to closely follow performance of its benchmark index. Okay, so how about unit trust funds? Okay, unit trust fund will be actively managed by a fund manager, and then the investor will have to pay fund manager to select stocks in order to outperform a selected index. So basically, what unit trust fund is, they will have a benchmark index, okay, and then the role of the fund manager is to select few stocks which can outperform this selected index. Okay, so this is the difference between ETF and unit trust fund. And then how about buy and sell transaction? So ETF is basically listed and quoted in stock exchange. Okay, so you can actually bought and sold ETF like how you do, towards stocks daily, okay, during the trading day. So if let's say for unit trust fund, you have to go through an agent, okay, or a fund management company to have the tradings for, if let's say for example like purchasing or maybe making selling your funds, you have to go through an agent or fund management company. So how about the cost? Okay, in terms of cost, ETF, as I mentioned just now, is traded like stocks. So basically, what you need to pay is brokerage fees, clearing fees, and then the stamp duty. Okay, so for unit trust fund, okay, they will have a sales charge and management fee as well. So usually up to, if let's say by Malaysia market, it can be up to 5.5%. Okay, and the annual management fee can be up to 5% per annum as well. So this is the difference between the cost of investment in ETF and unit trust fund. Okay, and last but not least is the minimum investment amount. So just like shares, ETF, there is no minimum investment amount. And then for unit trust, usually minimum will be 1,000, and then subsequent will be 100. So this is the main difference between unit trust fund and ETF. Okay, and so how about the characteristics of ETF? Okay, so what can we see from ETF? Basically, as I mentioned just now in the previous slide, okay, there will be a basket of securities which you are investing in the market instead of a few stocks. You are investing in the whole market. Okay, so if let's say you are investing in, for example, like Hong Kong tech stock, then basically you are investing in the whole Hong Kong tech market. Okay, so it's well diversified because it has a lot of securities in your portfolio, and then it is passively managed. So basically, your investment portfolio will grow according to the economy. So if let's say the economy is good, okay, and then your investment portfolio will show the same thing as well. Okay, so cost and easy trading, I already mentioned just now. Okay, basically it's actually very simple and low cost. And how about the transparency of ETF? Okay, so basically ETF is fully transparent because it will publicly announce their latest shareholding. So for this ETF, what they are purchasing, okay, what they are buying, they have fact sheet, okay, they have a clear indication of what is this ETF are going to do. Okay, so you can see everything in their fact sheet. Everything is listed publicly. And then in terms of liquidity as well, because it's openly traded in the exchange, so you can see the bid and ask price is actually available, very transparent. So you can actually look at the price right now and then to see whether you want to buy or make sell or something like that. And then there will be market liquidity because everyone can bid and sell at the same time. Okay, so one thing is that because today, what is the topic for today? Invest using Warren Buffett way. Okay. So has anyone wondered that why Warren Buffett will recommend us as an investor to buy ETF? You have some thoughts? Okay. So it's very simple because in long-term investment horizon, ETF can really outperform a lot of investment tools. Okay, so here's an interesting story I would like to share to you. In February 2018, the letter that Warren Buffett wrote to his shareholders did mention what Warren Buffett said is that 10 years ago, okay, 10 years ago, he made a bet with this guy in the right. Okay, his name is Jeffrey Tarrant. Is one of the most famous hedge manager during that time. Okay, during the financial crisis, subprime mortgage crisis in 2008. Okay, is one of the most famous hedge fund manager in that time. So Warren Buffett made a bet with him. He will choose S&P index, while Jeffrey Tarrant will do his fund picks. Okay, and they will see which fund perform better in 10 years later. Okay, so this Jeffrey Tarrant is very confident on his choice because compared to ETFs, hedge funds trading strategy are more flexible. They can buy and sell different investment products. They can also short the market. Therefore, their investment strategy are more flexible compared to buying S&P 500 alone. Because if let's say you are buying S&P 500, okay, basically you have to wait for the market to perform. Okay, if let's say the market is good, definitely your investment is good. But if let's say not, okay, for example, like during financial crisis, definitely S&P 500 alone will drop a lot. So now let us guess, okay? Why not we make a guess right here? Who do you think has won this bet in 2018? Warren Buffett or Jeffrey Tarrant? Maybe if let's say you think Warren Buffett will win, you give me a 1, okay? And if let's say you think that Jeffrey will win, you give me a 2. I would like to see the, okay. Saucy say Warren win, Nor say Warren win as well, Jason as well, Leon as well, Jessica, Jasmine. Okay, I think almost everyone think that, know the story that Warren Buffett wants. Okay, so yeah, definitely Warren Buffett has won this bet. Okay, so as you can see, the dark red line is S&P index fund. Okay, this is what Warren Buffett picks, and then for Jeffrey Tarrant, he picks 5 funds. Okay, so this is the average of the performance for the 5 funds. Okay, so basically Jeffrey Tarrant has selected 5 funds in total, but none of them able to beat S&P 500 index. If let's say we break down into annual performance, we can see that during 2008 subprime mortgage crisis, okay, S&P 500 has the worst performing among all, because if these 5 funds, funds A and funds E, okay, the performance definitely negative because it's during financial crisis time, but S&P index alone dropped 37%. So it's the worst performance out of all the funds. Okay, but 10 years later, okay, what happened? 10 years later, S&P index beats all the funds selected by Jeffrey Tarrant. For annual return, in terms of 10 years, they have the S&P 500 have about 8.5% annual return, annualized return, and the highest return of Jeffrey's fund, okay, the maximum is 6.5. So basically, none of them has able to beat Warren Buffett choice. Okay, so this is during crisis time. Okay, when 2008 during crisis time, hedge funds have more flexible strategy to do their trading because as I mentioned just now, they can buy different assets, they can even short the market. So turn around when the economy is in uptrend, it is actually very hard to outperform the market. This is why none of the selected funds can beat S&P index as well. Okay, so now we know what is the ETF. Okay, if let's say if let's say we want to include ETF in our investment portfolio, what are the available choices that we have in the market right now? Okay, but before we talk about the available choices, okay, we can spread ETF into 3 categories. Okay, first of all is broad market ETF, which is actually consists of many stocks and from different industry. Okay, so it can be indication of movement in broader economy. For example, S&P 500 is one of them. Okay, because S&P 500 not only include of tech stock, but include of a lot of company from different industry as well. They are top 500 largest company in the world. Okay, so the other one is sector ETF. Sector ETF is specifically in the stocks of and securities of a particular industry or maybe a sector. So for example, I did mention just now, for example, if let's say for Hong Kong Tech Index, okay, so this will be focusing on Hong Kong, China, Hong Kong, and then in terms of tech stock. Okay, so this is only focusing on certain particular industry or sector. And the last one will be the factor-based ETF. So basically, the characteristic of securities are different factors to help increase investment return and manage the risk of the portfolio. So you can say this as a customized ETF based on certain factors. Okay, it can be a different factors on it. So to be honest, most of the people in investment knows about stocks, okay, unit trust fund, but not all of them understand about ETF. So before I proceed, maybe I'd like to ask audience right here, what is the, I mean, before maybe we heard about ETF before, okay, we heard about ETF before, but out of 1 to 10, okay, how clear is your understanding about ETF? Maybe can I see some of your answer right here? Out of 1 to 10, okay, not very clear. Okay, Maslan 3, right? Jessica 7. Oh, okay. Okay, Muta have 8. Okay, so basically we can see that from the rating 1 to 10, basically you can see it's a mixed combination right here. Some of you are very clear about what is ETF, and then maybe some of you not sure that what is ETF, or maybe you know what is ETF, but how to trade, or maybe what is it including, there is some, how should I say, unclear situation right there. Okay, so to be honest, most of us will know about stocks and unit trusts. For ETF, because it's not very popular investment tools in Malaysia, so therefore there will be a lot of misconception about investing in ETFs in Malaysia. Okay, so the first one, okay, ETF is lack of liquidity. It is very hard to sell off if you need to. So a lot of people have this misconception, okay, which ETF have no liquidity. So you can buy, but then if let's say you want to sell, no one will want to buy. Okay, so you have to wait until there is buyer, or maybe you have to wait until the price drop a lot, only someone will be willing to buy. Okay, but this is not true, because this situation does not apply in Malaysia. Okay, in Malaysia, there is a position or maybe a role called market maker. Okay, so which their role is to ensure the liquidity in the market. So how does it work? Okay, for every ETF, there will be an issuer behind. Okay, regardless of what type of ETF, there will be an issuer behind. And then when investor wants to buy ETF, they will go through market maker to purchase. Okay, this is the buying process. Okay, but what happens if they want to sell? If let's say they want to sell the ETF, okay, same thing when investor would like to sell the ETF, market maker have, okay, market maker are responsible to buy back their holdings. Okay, so basically they need to buy back their holdings and then back alone sell back to their issuer. Okay, so this is what market maker do, and this is an example of ETFs buy queue and also sell queue. You can see that each and every ETFs have their ready queue. Okay, all buy queue and sell queue need to be fulfilled by the market maker. So because as you see, most of it, the buy queue and sell queue is in rounded. Okay, so basically this is market maker, market maker park out to ensure the liquidity. So if let's say you want to buy or you want to sell, you can base on the latest price. But of course, market maker will not move the demand and supply of the ETF alone. Okay, so the price changes will still based on the demand and supply, but of course, they just need to queue a portion to ensure that there will be a liquidity there. That's all. So this is what market maker are doing. Okay, market maker will be responsible to ensure there is enough liquidity in the market for ready buyers and seller. Okay, so okay. Next, what we have right now is here is that there will be a lack of selection. Regarding ETF in Malaysia. Okay, it's very limited selection. So this is not true as well, because in fact, Bursa have a lot of ETF selection suitable for different type of investor. Here are the available ETFs choices in Bursa. Okay, investor can select different types of ETFs based on their preference. So if let's say you prefer commodities, or maybe they can actually include commodities, equities, or even fixed income ETF in their investment portfolio. So for aggressive investor, okay, this is the choice you have: commodity, equities, and fixed income. And then you can select, if let's say for Sharia compliant, okay, there is a few ETFs as well for Sharia compliant. Okay, and if let's say for aggressive investor, you can opt for a leverage or maybe inverse ETF. Okay, so what is leverage ETF? For example, if let's say for this one, KLCI 2 times leverage ETF, so there will be a leverage effect. For example, if let's say KLCI move up 10 points, okay, your ETF will move up 20 points. Okay, so this is the effect for leverage ETF. And then for how about inverse ETF? Okay, inverse ETFs, this is how you can so-called short the market. Okay, so this is in the different way. If let's say for your, okay, we take back KLCI as an example. So if let's say KLCI increase, okay, the index increase, your inverse ETF price will drop. So if vice versa, if let's say your KLCI index drop, okay, your inverse ETF price will be increased. So this is how leverage and inverse ETF works. Okay, of course, if let's say maybe some of you ask me that, oh, Vincent, so what is the the best ETF, or maybe what is the choices can we have right here? Okay, so as I mentioned, basically it is based on your risk profile and your investment portfolio need. So if let's say for example like commodity, okay, for let's say for this Trade Plus Sharia Gold Tracker, okay, so it's based on gold price. It's more like a safe investment, or maybe to secure your investment instead of high returns. Okay, so if let's say you want to go for high returns, you can go for equity ETF, and then you can actually combine few of them, just like how you purchase stock. Maybe you won't be only purchasing one stock in your portfolio, right? So probably you will have how should I say, probably you have maybe tech stock in your portfolio, and then you have some construction stock in your portfolio, and then you have some maybe, for example, like energy stock in your portfolio as well. So this is how you can do the same thing for ETF as well. Okay, if let's say you can actually combine few of them into your investment portfolio, even in different market as well. For example, like China 50. Okay, so basically it will be investing in China A50 shares. Okay, so this is the choice we have right now for ETF in Malaysia. And then, okay, so another misconception on ETF ETF is that most of the people think that investing in ETF need to pay very high fees. Okay, I really heard that. I mean, some of my clients told me that I don't want to invest in ETF because I need to pay a lot of management fee for ETF. Therefore, it will take out my profit. Okay, but in fact, if we look at the comparison below, the fees for investing in ETF is actually same like stock. Okay, so as I mentioned in the previous slide, what you need to do, what you need to pay for the, the fees is actually fees, stamp duty, and also clearing fees. Okay, the management fees usually will be less than 1% for ETF. But how about unit trust? For the it can be up to 5.5%, depends on your advisor. Okay, and the management fee can be up to 5% per annum, depends on which type of fund choose. Okay, so basically this is two different things. If let's say for ETF, okay, ETF, you are purchasing a market or maybe a sector. Okay, so basically what they need to, okay, what the person in charge or the fund manager to do is just to tie the ETF according to special index. Okay, and unit trust fund will be, you can say that you are actually hiring a fund manager. Okay, which this fund manager help you to choose a few stocks. It can be a combination of 10 stocks or 15. Okay, and to make sure his or her task is to make sure that the stock selection will outperform the benchmark index. So depends on which benchmark index they choose. Okay, and basically the fund manager is like he's working for you and you all. Okay, basically you need to pay them. Okay, need to pay him to in a layman terms lah. Okay, you need to pay him or her in order to manage your portfolio and then to the so-called your portfolio. Okay, so this is the difference between ETF and unit trust. On ETF, you don't need to pay the someone there, because the so-called fund manager, what they need to do is just tie your investment to certain index. That's all. Okay, so this is for the expense ratio for ETF and also unit trust. Okay, and then last but not least, some people will think, oh, okay, F means that I have to time the market. Okay, if let's say, because market there is up and down, so if let's say market low, I need to buy, and market is in high point, I need to sell it. So it's very inconvenient, because I have to time the market and I need to have maybe do a lot of research in order for me to time the market. So but to be honest, this is actually wrong perception in terms of investing in ETF, because once I have a client to tell me as well, okay, Vincent, you are the expert for investment. Okay, I would like to buy ETF, but can you help me to buy at this point? Okay, and then can you help me to sell at this point, in the highest point? Okay, so basically, is it better? He asked me, is it better if let's say I manage to time the market, okay, and then I buy here and then sell here. Okay, so I have enough money, and then I buy at low point as well, and then I sell at high point as well. Okay, so I just repeat, then my money will grow a lot. Okay, it looks like very easy, but to be honest, regardless of ETF or maybe stock, you can do this in stock as well. Okay, even though you can, if let's say you can actually do that in unit trust investment as well. So, but the thing is that, how confident are you to time the market? Okay, how confident are you to time the market? You have to know that even Warren Buffett that cannot predict the market in the future as well, unless you tell me you have a crystal ball, okay, or maybe you have some special power that you can foresee what will happen in the market. And then well, if let's say you manage to do so, then you actually don't need to invest in stocks or maybe ETF as well. You can have a better choice. For example, you can go buy Toto, you can go to Genting, but of course, this is I mean, non-halal, okay? So you have a lot of choice. If let's say you can predict the market, okay, basically no one able to predict the market in the future, even the best investor in the world, okay? So what we can do is that if let's say you are purchasing ETF, okay, you actually don't need to worry about the so-called return and the market movement, because the reason is very simple. Our world population will be getting higher and higher, okay, which means there are more people and there is more demands in terms of goods in the market, okay. So this is very economy will have inflation, okay, because we have a lot of demands. I mean, our demands are getting more and more, okay. So if let's say for example do you hear before that our parents say that I wish I could buy more houses in back 20 years, okay. What happened? Because in these 20 years, the house price or maybe the mortgage price, okay, has increased a lot, okay. What makes the mortgage price increase a lot? Are they building a better or maybe even a more comfortable house? Maybe yes, but the reason that push up the market price of mortgage is actually by demands, okay. We have more than 30 million population in Malaysia right now. So when the demands get higher, and inflation will take place, okay. This is how a normal economy grows. So definitely price of goods are getting higher too. So in terms of inflation, right, manageable inflation is good for the economy, because economy needs certain level of inflation to grow. Just like for example, if let's say your children, okay, they need vitamins, they need those I mean proteins to grow as well, okay. This is to help the inflation will be helping economic growth as well, okay. But what I'm talking about is manageable inflation. If let's say it's out of control, it's a different story. So therefore, by investing ETF, or you are actually investing in the whole market, okay. You are actually investing in the whole market, and along the time we don't need to actually time the market, because as long as there is market demands, economy will get stronger, and investing in market, the whole market will benefit from it as well. So this is a few misconception regarding for ETF, okay. So for today, what I'm going to go through is that to have a brief introduction for you all regarding for ETF, and also to understand how does ETF works, okay. Because for ETF, there will be a lot of how should I say, because what can we say is that in terms of stocks and unit trusts, the ETF is not so popular, but Warren Buffett teaches an easiest way to invest, which is invest in ETF, okay. Because as we can see in the previous few slides, okay, basically in terms of ETF return, you will able to beat a lot of funds or maybe a lot of investment tools in the market. Because when market grows, okay, there will be a lot of how should I say, there will be a lot of things that is beyond our control. So when you are trying to time the market, or maybe when you are trying to outsmart the performance of the market, okay, it's actually very hard, because the market grows, they have their pace to grow, okay. And then as I mentioned just now, basically whenever there is demands in the market, okay, when demands grow, definitely inflation kicks in, and the market will grow as well. So for Warren Buffett, when he suggests ETF as one of the simplest investment, another reason is that you don't need to time the market, as I mentioned just now. Because if let's say you need to study a lot of okay, for example, if you choose a specific stock, okay, and then for example, like maybe you need to know the company's fundamentals, okay. You need to understand what is the business is doing, and then will this business grow in the future, or maybe this business is actually in the sunset industry, okay. So if let's say the business is in a downtrend, okay, business is getting worse and worse, then you need to find another company to have the future trend in the market, okay? But investing in ETF or maybe investing in index fund, you don't need to do so, okay? Because basically market will definitely select those, okay, for example, like I take S&P 500 as an example, okay? This is the top 500 companies in the market. Market will do the selection and do the filtration for you. So if let's say, for example, my company, A company, okay, is in 500, okay, 500 place. If let's say I'm performing better and better, I will get up to the, the list there. But if let's say I'm not performing, my company is not performing, my company is not growing, and then my company is maybe making losses, for example, okay, market will definitely kick me out of the list, okay, and then it will be replaced by another strong company. So basically, market already help you to do the selection and the filtration instead of you need to look at the company alone, okay, and then study their annual reports, study their business, that plan, and then maybe even look in technical chart, okay, to find the support and resistance level or something like that. So this is what ETF can do for you. And then we have a lot of selection right here. So basically what you need to do is just select a few, okay, which you think that is, suitable for your own portfolio, okay, and then you include in your portfolio. So this is how ETF works. So investing investing using Warren Buffett way, which Warren Buffett teaches the simplest way, because I think most of us has our daily job right here, okay, and then maybe when your time to study the market or maybe study the investment tools that you need, okay, or you maybe you're interested, it takes a lot of time, okay, and it requires certain knowledge as well, okay. So for example, if let's say you are studying in terms of F&B industry, okay, so for example, you need to know how F&B works, okay, you need to know how what is the pain point F&B facing right now, okay, just like you are doing a business. If you own a cafe, own a restaurant, you need to understand what is happening in F&B right now. So you have to study a lot. If let's say, for example, okay, right now maybe you are an restaurant owner, okay, but when you study a company, you are studying a tech stock company, so you have to understand how tax work, okay, how technology works. Maybe in Malaysia, semiconductor is one of the largest industry in terms of technology, so you have to understand how semiconductor works, okay, is the thing including, the industry included in technology sector, okay, in semiconductor. So you have to study a lot. But if let's say for ETF, you don't need to time the market as what my client said, okay, purchase here and then sell towards here, because it's actually quite impossible for you to do that, for us to do that, okay. We don't have crystal ball to predict the future, but along the time we know that as long as market demands is there, market growth, and then inflation kicks in, manageable inflation I'm talking about. So along the time we know market definitely will increase from here to here, okay. So this is the difference between investing in ETF and active portfolio, because why Warren Buffett say that is actually you can use a passive way to outperform a lot of investment tool out there. So this is in terms of the that you put and the return that you get, okay, is actually quite worth it. This is why Warren Buffett will introduce or maybe recommend for normal people like us to invest in ETF. Okay, so this is for today. I will, because due to time issue, I can't be share a lot of ETF insights in ETF. But of course, we do have a Q&A section later. Okay, so if let's say anything you want to ask, you can ask in the chat box or maybe in Q&A. And for later, we will go through your question and then I'll try to answer one by one. Okay, so for my sharing today will be a brief introduction for ETF, especially in Malaysia. And then maybe for now, I will pass back the session to Stella. Okay.
Okay, thank you, Vincent. Okay, now, if you guys have any question, please type it in the Q&A box so that he can address your question accordingly. The first question asked by Maslan Yusof. Where can you find out the details of ETF in Bursa? If there are website link where we can check for the info.
Okay. So basically for all this report on the details for ETF in Bursa, you can actually look at Bursa Malaysia website, because Bursa Malaysia recently they are also how should I say, they are also trying to educate the public, okay, regarding for ETF. So basically they have a lot of details and information on their website as well. You can actually go to the Bursa Malaysia website or maybe Bursa Marketplace, okay, and search for the information that you want. There is a lot of information right there. For example, the right there, and then the commons question FAQ or something like that. Yeah. So for example, like maybe for ETF, what is the option available? You can actually easily accessible in Bursa Malaysia website as well.
Okay. The second question is, who are the market timer? Is it similar to traders?
Market timer, I suppose you are talking about market maker that I mentioned just now. Okay, market timer, basically they are from banks as well. So from the issuers as well. So if let's say basically it's their own stuff. What they need to do, for example, if let's say like Maybank, Public Bank, or RHB, they are issuing ETF. Okay, so they will be a market maker from themselves to ensure there is enough liquidity there.
Okay, the next question is, how long should we hold on the ETF? 3 months, 6 months, or a year?
Okay, ETF depends of which type of ETF you are holding. Okay, for example, if let's say your ETF is, for example, like Gold Tracker. Okay, so because Gold Tracker is more like a safe assets compared to equities. But to be honest, ETF usually you need to hold a longer period, maybe in 5 or 7 years or even 10 years. Okay, I tell you what's the reason behind. Because if let's say you want to hold 3 months, 6 months, or you are actually predicting or maybe betting that it will go up, the market will move up in the next 6 months. Okay, basically what you are trying to do is to time the market. Okay, so basically if let's say for long period enough, okay, long term enough, and as I say just now, market will grow based on demand. Okay, so basically you don't need to time the market and then to guess what will happen in the next 6 months. Okay, so if you ask me, ETF, the longer you can hold, the better.
Okay. The next question asked by Lee So Si. Does the ETF stock pay dividend?
Okay, ETF. Okay, because as we know, I mean, some stocks they will be paying ETF. Okay, so for most ETF, they pay dividends to their fund holders, either semi-annually or annually. So they do pay dividends, but they will pay according to a certain period, a fixed period. Because, for example, if let's say I'm holding 10 or maybe 20s or maybe 30s companies, because okay, for example, like KRCI index, I'm holding 30 companies. So these 30 companies can pay dividend at a different time. If let's say I want to do, whenever a company issue dividend, I need to pay to you, it will be a lot of job to me. If let's say I'm the one who manage this fund, okay, or this ETF, okay. So basically they will pay you the dividend, but they will collect and combine, depends on, it can be semi-annual or maybe annual basis.
Okay. The next question asked by Rohana Rosley. How to buy ETF? Should she open a specific account or she can trade by using the stock platform?
Okay. Basically you can just simply trade by using the stock platform, because for ETF is exactly, trading for ETF is exactly same like stocks. So you just need to require a CDS account. So once you have a CDS account, you have a stock trading account, you can actually purchase a ETF in Bursa. Your trading apps as well. It's available in Bursa.
Okay, the next question asked by Noor Mohammed Yunus. Can we set stop loss for ETF?
Yep, you can. It's just like trading normal stocks as well. You can set stop loss or maybe take profit.
Okay. The next question asked by Chua. What about MyDeal?
What about?
MyDeal. MYGHDO.
Let me look at the question first. MYGHTO.
Yeah.
Okay. Where's the question? Sorry, is that my full? I can't see the question. Oh, MyDeal.
Yeah.
By Chua, right? Okay. Okay, I need more clarification of this question, because what about MyDeal? Chua, you are trying to ask what are you trying to ask? What is MyDeal, or how does MyDeal works, or something like that? I need to understand more about your question first, because I'm not sure what you're asking.
Okay, the next question. Maybe you can share with us what are the advantage of ETF?
Okay, to be honest, okay, frankly speaking, there is nothing so-called as, because I have a lot of clients, sometimes they will ask me, Vincent, what is the best thing or best tool to invest? Okay, so what I can say is that actually, despite I'm saying that Warren Buffett recommend a lot of investors to buy index fund, okay, as similar like ETF, but then there is actually no best investment tools in the world, because the reason why we have so many investment tools is that certain of investment tools will be suitable for different type of people. So for ETF, the advantage is that first of all, it's low cost. Okay, you don't need to pay a lot of sales or management fee for ETF. And then second thing is that you don't need to spend effort to look at what happening in your investment. Okay, because if let's say you are investing in a certain company, you need to study the company, and then you need to follow up to make sure that this company performing well. But as I mentioned just now, if let's say you are investing in the market, okay, so what you need to do is that as long as market performs, and then as long as there is demand in market, your investment will benefit. So this is one of the main reason Warren Buffett recommend us to buy ETF. Okay, because you don't need to do anything. What you need to do is that you just passively, at least you understand what is happening in the macro economy right now, and then just passively manage it. But as I say, doesn't mean that ETF is the best in the world, because it depends on whether it suits you or not. If let's say for ETF investment, you need to take a longer investment period, it might not suit everyone. So it depends on what you need in your investment profile.
Okay. The next question asked by John. Does ETF has expiry date like wallet?
No, because ETF will be based on the index or maybe a certain benchmark, okay, and then it can be set. How should I say? Is another products which from either from the company or the bank issuer, okay. So they have their maturity period, but for ETF, no.
Okay, the next question is, what determines the price of an ETF?
Okay, so what determines the price of is that if let's say for ETF, okay, they have their holding, how should I say, they have their holding assets as well, okay, and then the price of ETF is actually very similar to the net asset value of the asset, okay, so it's actually very similar. And then basically the market value will be based on the underlying stocks and any net income which not distributed yet, okay, so this is the total value of the holdings in the ETF. But of course, the price of ETF also can be affected by market demand as well. So if let's say a lot of people are interested in this ETF, okay, then there will be a lot of demand back to, I mean, a lot of demand buy in, and then definitely the price will shoot up. So similar like stocks, this is one of the factors that will be determine the price as well.
Okay. The next question is asked by Wai Ying. Will ETF be delisted? Has it happened before?
Okay, for ETF, basically, how should I say? Because it can be delisted, but usually, how should I say, unless there is something issue, some issue or maybe some problem regarding the ETF, okay, but basically, these kind of cases will be very, very bad because it's not like a company, it can go bankrupt. ETF can never go bankrupt unless you tell me you are investing in KLCI index and the whole Malaysia go bankrupt, then I got nothing to say for that. But ETF can never go bankrupt. So if let's say if it's delisted, maybe there is some issue and then maybe there is some instruction ordered by Bursa or maybe Bank Negara, only it will happen. But I can say it's
Okay, the next question is, can you explain more about leverage and inverse ETF?
okay, sure, no problem. You try to imagine normal market index graph, okay? So if let's say when market is going up, okay, normal ETF may fit that. So if losses. So if leverage for KLCI, because we have in Bursa we have a few 2 times leverage ETF. So basically what you just need to know is everything. So if let's say the market 10%, your profit goes up 20%. That's all. If let's say the market go down 10%, and your losses will be 20%. Okay. So for leverage ETF, you need to see what is the ratio there. So for Bursa, the few 2 times leverage, then this everything times 2 easy. So inverse go vice versa. As I should say just now, sometimes like ETF and index performance are like best friend, right? So they move together. So for inverse ETF, imagine they are maybe they get quarrel, okay, maybe they get into a fight, so no more friends. So as long as one go to the left, the other one definitely will go to the right, so different direction. This is for inverse. So if let's say market move up, okay, your performance will be your investment performance are making losses. So in vice versa, if market goes down, you are making profit for that. This is ETF.
Okay, the next question is, if I want to trade ETF, whom should I look for?
Okay, as I mentioned just now, because ETF is actually easily accessible in, in I mean in KLCI, in Bursa. So basically, what you need to do is that you just need to have a stock trading account, the same account that you trade for stocks, okay, and then you can actually trade ETF as well for the same account. But of course, I will recommend to before trading any ETF, I recommend you go to Bursa Malaysia website first, okay, to look at the fact sheet, or maybe to understand, at least you understand what is this ETF about, what is the benchmark, what is the I mean, everything will be written in the fact sheet. So at least you understand your investment first before you make any.
Okay, the next question is, why ETF is better than stock?
Okay, why ETF is better than stocks? As I mentioned, not to say ETF is better than stock or best in the world, okay, but it depends on which type of investor you are, okay. So if let's say you really put a lot of effort, you're willing to put this effort as well to study the stocks, the company, and then you know this company will be having an uptrend in the future. So definitely you can go for your choices. But the thing is that invest will the risk that you are taking is much lesser than investing in stocks, okay? Because maybe I make a simple example. So if let's say you are holding, I mean, a lot of investment tools, okay, because you have a lot of securities in your basket, okay. So say one company fails, okay, or maybe it's not making profit, or maybe even bankruptcy, the company can go bankruptcy. But as I mentioned just now, the market can never go bankruptcy. So basically, maybe for example, like you are holding a basket of eggs, okay, okay. Of course, we always mention that we don't put our eggs in a basket. But if let's say one of the eggs, or maybe one of the, I mean, yeah, one of the eggs already spoiled, or maybe smelly, you still have others for you to cook your meal or something like that. Yeah, but if you are investing in companies, so if it breaks, it breaks. That's all.
Okay, the next question asked by Stephanie. With the Ukrainian war, is it the right time to buy the ETF for uranium?
Okay, for Ukraine and Russia war, what can I say is that okay, as of now, we couldn't expect what will happen in the future, but sounds like it looks like the Ukraine-Russian war has I mean, take off pace, not so tense anymore. But definitely, if you are investing in ETF, okay, anything that causes market crash is a good time to buy, because you know you are not investing in short term, okay, and then you know that you are looking in few years later, okay. So whenever market drops due to unexpected unexpected events, okay, so basically there will be a lot of fear in the market, okay. People tends to sell off their investment as soon as possible, okay. But just like what Warren Buffett said as well, when be fear when people are greedy, and then be greedy when people are fear. So you are moving the different direction. Definitely any unforeseen events, or maybe expect events that causes market tension, good time to buy.
The next question is there any risk if you invest in ETF?
Okay, definitely there. Okay, but depends on which type of ETF. As I mentioned just now, because you can actually have a lot of types of ETF out there. Okay, and then for if investing, okay, but first of all, risk somehow regardless of which the risk come from the investor itself. If let's say you don't even understand what are the investment you are investing, okay, you don't understand what you are purchasing, even for ETF, definitely it will be risk. But for long term wise, okay, if you are looking at a market in, okay, long term wise, I can still say that there is risk there, but your risk is minimum, because that this is definitely, you will never get back. I mean, like in previously, maybe 250 one time me, you will never, okay, maybe you can cook yourself lah, but in out there, you won't get back this price. So definitely this happens to the market, this happens to all the goods out there as well. There will be inflation kicks in.
Okay, the next question is, may I know, are the ETF good for long term or short term?
ETF definitely will be, I will be recommending, if let's say you want to buy for ETF, you have to expect for a long-term period, because as I mentioned just now, if you are planning to invest in short term, you are actually timing the market. So no one can knows that, regardless of Malaysian market or maybe US market, no one can knows what will happen in the second half in 2022. Okay, of course, we have we can make analysis on that, and then we can by that we make an assumption, but no one will be definitely 100% correct. So if let's say you are only planning to purchase in the next 6 months, okay, so if let's say market drops, you don't have enough time to recover for your investment losses. But if let's say you are planning to invest in long terms and you don't want to care about it, okay, if ETF will be a good choice.
Okay, the next question asked by William. What will happen if the ETF issuers collapse?
Okay, because frankly speaking, all the ETF or maybe all the investment are, regulated by Bank Negara and Bursa Malaysia. Okay, so if let's say this really happens, basically that they were like that, which it will be a rare case, because usually this type of investor are very strong financial institution in our country. Okay, but of course, what if happens? Definitely, Bursa and Bank Negara will step in, and then they will monitor what is the situation, and then okay, just like and maybe I make it a live example, just like a plane. If let's say it's coming down, you cannot stop it, but what you can do is that to land it properly, minimize the losses. So this is what Bursa and Bank Negara will do. They will step in and then restructure, or maybe we have to delist it. Back to the just now the question. If let's say really have to delist this ETF, they will definitely give enough time for investor to sell off, and then to ensure there will be no panic selling before delisted. Yep. So this is the same thing happen if let's say the issuer goes cheap.
Okay, the next question asked by PK Lim. How do I know the net asset value of any ETF?
Okay, you can actually look at all the information. All the information is actually available in Bursa Malaysia website or Bursa Marketplace. So you can just look at the information right there. Maybe Stella, if after this webinar, maybe you can share them the links or maybe some updates on it. Yep.
Okay. The next question asked by Christine. There are many ETF products. Which are the more popular ones you will recommend?
More popular, say, in Malaysia. Okay, depends on how familiar are you with overseas market. Okay, but this is okay. I need to have a disclaimer. This is only on my own perspective. I'm actually looking at ASEAN or maybe Hong Kong, China side. Okay, because the tech regulation issue has been more than. Then in terms of valuation, China, Hong Kong is actually quite cheap. But this is on my own perspective, I mean my own view lah. So of course, if let's say you are interested, you can look on China ETF as well. If not, maybe some, if let's say you are talking about popular, definitely S&P 500 is the most popular in the world. Okay, and if you like to go for, okay, I will still prefer, okay, then you can just go for KRCI index ETF. No problem for that.
Okay, the next question asked by Edmund. How ETF market makers make money?
Okay, market makers, how should I, maybe instead of market makers making money, is the issuer making money. Okay, but because market maker is just a role that okay, the market maker is not the so-called the Goring team, okay, because some will misunderstood that, oh, market maker, they create the demand, they create the supply to I mean affect the price of ETF. Their job is there's enough liquidity in the market. Actually, like same like okay, issued by behind ensure. So basically for issuer, what they earn is the same thing, because paying for brokerage fees, stamp duty and clearing fees. Okay, so of course, if let's say their selection, or maybe their ETF are more popular, okay, they, of course there will be benefit for that, because a lot of people trade, then definitely there will be benefit for that.
Okay, the next question. How should we consider between mutual fund and ETF for long-term investment?
Okay, so basically, for long-term investment, mutual fund and ETF, okay, this is actually two different products. In short, ETF is like you invest the money in the market, okay, and then you let the market to decide where it goes, okay, whether it goes so up on or down in the future, okay. But for mutual funds, basically, as I mentioned earlier, you are actually you can say that hiring the fund to help you to select a few funds. Okay, so you need to know what is the funds that your fund manager or maybe your advisor. When this kicks in, advisor plays a very important role in a market, because if let's say for advisor that doesn't care of your investment, or maybe they don't even know what you are investing in, they just tell you that, okay, buy this, it's very good, okay, then definitely you are on risk. But if let's say your advisor is good enough that to share you what you are buying, give you some, and in terms of your whole portfolio allocation, how can you allocate your portfolio in order to suit you more, then mutual fund have a chance to perform better than ETF. But of course, depends on your advisor as well. So in long term, just now as mentioned, it's actually very hard for mutual fund to beat ETF. Okay, but there is difference there, because active management and passive management. For active management, you have the flexibility to change your strategy during the, okay, but for it, basically what you do is just passive manage. Okay, you buy and go, that's all.
Okay, the next question asked by Pusparani. What is the yield range for ETF usually after 5 years at 8% to 10%?
Okay, it depends on market. Okay, you have to understand, because ETF alone is a tool, but different type of ETF can invest in different market. So if you are talking about US market, China market, definitely their growth will be bigger than our market, because our market I mean, compared to the the large economy scale, okay, we are still in the middle range of the skill there. Okay, so if you are talking about, for example, I make an example just now for China market. So if let's say you are investing in China ETF, then the return might be more than that. Okay, but in average, we will look at 6 to 8% for ETF because okay, basically it's just based on the market performance in market growth. Then for company, the country GDP growth, okay, it will be around 4 to 6, maybe 6 to 8, depends on which market you are investing.
Okay. The next question is, what factors affect the ETF price?
Okay, what factors affect the ETF price? First of all, as I said, you are looking at, because all the ETF price have their NAV, net asset value. So if let's say the selected in performing well, definitely it will affect. But the other thing is that the demand and supply as well. So if let's say this ETF is very popular, a lot of people want to invest, definitely the price will be higher.
The next question asked by Edmund, if the price of the ETF increase and you sell back to the ETF issuer, does that mean the issuer lose money by buying back at higher price?
No, because okay, this is definitely no, because issue is not a gambler. Okay, they are not gambling with you whether the market will goes up or down. So basically, what they do is that it's just demand and supply. If you are talking about company, when the company share price increase a lot, okay, for example, like in the past 20 years, I mean, your for example, like Public Bank, okay, Public Bank is a lot in 20 years. But does that mean that Public Bank make losses when they want to do share buyback? Okay, it's definitely a no, because I mean, in terms of issuer, what they do is make product and then in terms of some brokerage returns or something like that. Okay, but then when you sell back to the issuer, they are not buying back in a high price or something like that. So it's not.
Okay, the next question asked by Pusparani. Can we buy the ETF bit by monthly or quarterly?
You can do that as well, because if I'll make it another words that in our investment terms is called dollar cost averaging. Okay, DCA investment method. So you can actually do that because I understand that it's very hard for everyone. Like for example, like you don't have one lump sum money to invest, but when we contributing monthly, okay, you are actually adding bullet in your investment portfolio. So yes, you can do that. And then for this method, you're actually lowering down your risk as well, because in a high point you will buy, when market drops you will as well. So in average, your purchase price is relatively low compared to one shot. For example, you have 100,000 or maybe 1 million. Okay, you one shot buy and you just wait. You don't do anything. Okay, you might be buying in a high time. I mean, when market is in the peak. So of course, your investment is the risk is higher compared to if you are contributing monthly.
Okay, the next question is, what is the capital involved for ETF?
For ETF, there is no minimum investment, just like stocks. So for any capital, as long as minimum one lot, you can buy. That's all.
Mm-hmm. The next question asked by Maslan, where can we report on the best performing ETF before we buy?
Okay. you can actually access this information in Bursa website as well. Okay, Bursa Malaysia website, because try go to Bursa Malaysia website. I realized one thing is that a lot of investor investing in Malaysia, but they rarely go to Bursa Malaysia website. Okay, maybe when they look at the news, maybe they have some, for example, like have some Telegram, or maybe some I mean, for example, like KRC screener, okay, we'll get a lot of information there, and then maybe some news from the newspaper or something like that. But really, rarely people will go to Bursa Malaysia website to look at the information when they want, because in fact, this is the we are investing under Bursa regulation. Okay, so Bursa Malaysia website has everything, seriously. So if let's say a lot of regarding not only on ETF, even for stocks, even for other investment tools, you can just go to Bursa Malaysia website to have a look for it, because this is the more consolidated platform we have in Malaysia. So definitely all the information you need, it will be on, I mean, in the website as well.
Okay. The last question asked by Edmund: how do we know how many units of ETF issuer can issue?
Okay, if let's say basically there is no how should I say, there is no limit of, I mean, maybe a fixed amount that the maximum issuer can issue, but this will go back to Bank Negara, okay, because basically whenever an issuer wants to I mean issue a new ETF, okay, they have to go through Bank Negara and Bursa Malaysia. Only when both parties approve, they can do that. So have to look at definitely they will look at what is this ETF investing in, and then what benchmark or something like that. So as of now, I think in future there definitely there will be more and more ETF selection in Bursa Malaysia, because for Malaysia right now, there is actually, as I mentioned earlier, a lot of people still don't really understand about ETF. In fact, ETF is actually very simple to understand. Okay, so it's just based on the market index performance. But due to the demand out there, more and more people knows about what is ETF. I believe in future Bursa have in Bursa there will be a lot of ETF choices there. So as of now, there is no limitation on how many, okay, and definitely it will be more choices. We can have more choices in the future.
Okay, thank you, Mr. Vincent, for his insightful sharing.
Okay, thank you so much. And then
Hope you
yeah,
guys
thanks for your time today.
hope you guys have learned something new today.